Hi everyone. What a day we've had. What a week we've had. Dollar remains under the cosh. That chart you can see to the right of me or the left of me, to the right of me, isn't it? If you're looking at me, that's the euro on the daily. Back through 116 quite strongly here on Tuesday, followed through Wednesday, and we're up again today. We threw our first target. We went long. Was it last night, 24th? No, night before. And obviously our stop loss got trailed up at 117.47. We've been to this morning. On the back of, obviously the Trump comments yesterday has weakened the dollar all around. Chatter about he hates to say hate, but he doesn't like Chair Powell of the Fed, who he appointed himself. He seems to forget, but that's Powell for you. Sorry, that's Trump for you. He wants interest rates cut by 2.5%. He thinks there's no inflation. He keeps saying there's no inflation. There's no inflation. And obviously the successful, or so far successful ceasefire that's held between Iran and Israel. So everything's up. We got stock markets rallying. We got the dollar under the cosh, and we got trends set, and we are the right side of the trends. Thanks very much for that. From having a terrible week last week, our worst week for a long time, not just for 2025, but a long time. I haven't lost that many points in a long time, but there you go. Aurora, good afternoon. How are you, my friend? Let's move the. There we are. Let's just put it like that. How are you, my friend? You okay?
Hey, fine. How about you? How's it
Yeah,
going
good,
on?
good. It's a bit cool here in
Making
London today, but say
it's hot here, starting the hot days
I
here
can't
in
cope with that
Turkey.
anymore.
Yeah,
I much prefer the changeable nonsense that is London weather in the summer. It
yeah.
was raining a bit this morning, but underneath you can't see. I've got shorts on actually underneath here, so it's that's the way we swing here in
Yeah.
London at the moment in the city. So yeah, there's lots of people wandering around in the city in shorts as well. I saw some guys in flip flops and socks. I don't know whether that's a London thing, but I don't know anywhere else in the world. But there's that's acceptable workwear. They've got their smart tops on, quite often a jacket along with a smart shirt, but shorts, socks and flip flops. I just find that really grates me. I'm a tie jacket and tie guy, but I haven't worn a tie for a while. Certainly doing these presentations. Anyway, big data dump in 20 minutes, 15 minutes at the bottom of the hour. We got claims, which is really going to be interesting to see if we're going to hold at this 240, 250 level weekly claims. Durable goods, which I know is one of your pet data dumps, data points, and obviously the backward-looking GDP as well, continuing claims as well as obviously the weekly claims, but lots to get our teeth into. As I said, the reason we've had this move against the dollar in the last 24 hours in particular is Trump's comments at the press conference yesterday in NATO, where he undermined Powell again, talking of 2.5% rate cuts. He's not doing the right thing, blah, 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 and suggestions that in a Wall Street Journal article today, and also it was rumored yesterday, it was talked about yesterday, that he's got three or four people on his shortlist already. Obviously, there was that chatter about Collins, not Collins, it was Borman and Waller already, who've come out with this idea about talking about cuts in the July meeting. And Powell's pushed back on that on his 2 days of testimony, and some others. But also, he may start talking about or interviewing candidates September, October time. Again, it's classic Trump playing to the audience, playing for his big moment. So even though that Powell's position he doesn't end his term until May 2026. So it's what the market is worried about is the undermining of the Fed, its independence from the president and the administration, and obviously this parallel decision making that might be going on. One that's in hock to President Trump. And the other one, the independent Fed Bank. And I know where you are sitting at the moment, in that certain country where you are at the moment. That's been a big problem there as far as central bank independence is concerned. Is it not, my friend?
About the independency or not, there is a too many the question actually. When we are talking about the central bank should be independent or should not be independent or depend. Yeah, the central bank should be independent, but being independent is a little bit different with being in line with the government and totally there is a very tiny teeny line to say that okay the central this is just put it like that. You are the govern you win the election and you are the president, or you have the government right now, and the idea of the government is that to rule the country's economy in with this scenario number A. That's just, let's call it the scenario A, just like economic scenario. But you have the central bank. uh, I mean, you have the central bank director or the whatever governor or whatever that supports the scenario B. Yeah, they are the separate, they are the independent, but your scenario is not matching with the scenario that you have in your central bank, so it makes a bigger problem for for the country, not because of the government. I mean, I'm not putting that in a political way. I'm putting that in the effect that the people and the economy is getting, because when your central bank and your government policy is totally against of each other, you get nothing. So that's why sometimes the governors or the company, I mean the presidents or or governments trying to have the central bank, someone in the central bank, that they match their idea of the economy is matching together. Things that right now we have things that happening in United States is not mostly because the president want to I mean touch the central bank, do whatever he wants. No, I think it's mostly because that he supports the idea, which is different idea of the economy. He's following the different idea of the economy, and right now there is something else going on in a central bank. So that's why the little bit difference here. I mean, it's with very, as I said, it's very tiny teeny. We had this problem in Turkey. Look, the central bank and the government, they had totally different mind about how they have to rule the economy during the corona. So right after the corona, what happened during the corona? We had the government and the central bank at the same idea. They made some decisions, and with this decision, yeah, they could control the Turkish lira value, but at the same time, we had so many problems with the inflation problem. Right after the corona change, the government also we had the election here in Turkey, and we had a new government, but the new government with the same president, but the new government, I mean the cabinet and the things are they changed. So the central bank here we had a change in the central bank. The new governor of central bank came a lady from the United States. She was working with the Standard Charter and blah blah blah, very good economist. But she had a totally different mind with what the government wanted to do. So what happened? She was ruling the central bank in a way she likes, and she was thinking is right, and the government was ruling the economy in a way that they were thinking they're right. So this difference made what happened. I mean, the central bank also was independent during that time, because the economy minister also was supporting the idea of the being independent, having independent central bank. So what happened? Again, the inflation not stopped. It's continued to go higher. At the same time, the value of the Turkish lira also lost much more than expected. So before we had one problem, now we had two problems. Now
Yeah,
before we
yeah. I mean,
supposed to solve one.
and nothing's changed, and the
Yeah,
politics hasn't changed.
yeah,
That's the
yeah,
point about
yeah,
independent bank. It's not independent at all. It's it's what the Erdogan in particular wants it to be, and it's counter to normal economic parlance, and hence you get a chart
yeah,
like we see on the chart. That's only from 2024 when we were at 28 to the dollar. 5 years ago we were 6 to the dollar. I mean, I mean, the Turkish lira has been absolutely hammered, and how the
yeah,
people of Turkey deal with imports is beyond me, to be honest. But there's no sign of this. Is a weekly chart. I say it only goes back to October 2023. If we took this back another 5 years, it's exactly the same trend, and the consistency of Erdogan's economic policies have just completely undermine the lira. But anyway, that's a story perhaps for another day. Let's have a look at what's going on elsewhere in the world today.
So just a little bit, one more point to say before
Yep,
going to
of
further.
course.
When we are talking about the value of the currency, like the value of the currency, the real value of the currency of the governments, and what it should be with the real value, there are two different things. And the value of the currency that it can support the economy and export also is a little bit different. So the peoples and the countries, in different countries, they have a different policies about their value. If for the Turkey, actually to have the Turkish lira's value around the 40, it's not such a bad even the idea, because this country is a country that we have more than 20 million tourists a year. So when you have the value of your currency around this, not so weak but not powerful value, so you can accept more tourists.
Oh,
So you have
absolutely,
like
absolutely. I
so.
mean,
So it's not such a bad idea also even to
yeah,
have the
yeah.
Turkish lira in this
It's
area. So
it's a big new certainly in the last 20 years, new
yeah,
European destination, Turkey, and
yeah,
there's so many. It's such a big country. There's so much coastline to exploit. Yeah,
yeah.
I mean the potential's massive, obviously. So yeah, I mean a week lira obviously helps the tourist trade, which is very very significant in Turkey. You're absolutely right, of course. Yeah. Anyway, today, I'm just using the euro as an example. Very, very strong 4-day rally here for the euro. Aussie's the same. We're back over 65. Strong 4-day candle pattern there. That's classic. Up we go. New highs for now for the Aussie. Dollar CAD is under 137 again. So the downtrend remains there. Swissy, our favourite, our biggest mover, new 10-year lows this morning. Got to my target from last night, which I thought was a bit stretched, but we stuck with it and we've hit target. We're still short on that. We've got a whole position and half a position still live on short dollar Swiss, so it's very much in the money. Dollar yen is back under 145. It couldn't hold the break over 145 this week. And down again, obviously different scenario a bit with the yen, but the dollar remains under pressure. Kiwi back over 60 from it's dipped into 59. So this is 59 on Monday, and here we are over 60 and heading towards a bit like not as strong as the Aussie, but looking to break up higher and test the 61 level, which the Kiwi hasn't been anywhere near since all the way back here in October. So Kiwi also bid against the weaker. It's the weaker dollar, not necessarily the strength of these other currencies, save sterling and euro. So euro we've just had a look at over 117, and sterling over 137 this morning. Next upside target is 138 for sterling. Big strong 4-day rally for sterling as well, bouncing very aggressively off that 50-day moving average, that big thick green line there, through the 20-day moving average on the same day. It's a very powerful signal on Monday, and off we went to the upside running. So sterling bid. The data is about to drop, so let's just go back to the calendars. So we got weekly claims. Are we going to be around this 245,000? GDP less important, but if it's positive, obviously the administration will spin that accordingly, and negatively the opposition so wise. Durable goods, be quite interesting to see what that number looks like, and pending home sales later on this afternoon as well, following the big miss for new home sales yesterday. So here we are, just about to come across the terminal. Oh, here on the internet, it's not a terminal. It's not my terminal. I'll see if I've got it. It's broken anywhere else. So let's have a look. So core durable goods positive 0.5 of 1%. That's an interesting uptick. Claims still high, but less high than the last 3 weeks at 236,000. Last week hasn't been reviewed low, so that's holding up. So I'll just bring in the chart on that in a minute. Final GDP for the first quarter, actually a downgrade. That's not going to go down very well. 0.5 of 1% negative from 0.2 of 1%. So that's a final reading for first quarter GDP. Obviously, we're at the end of the second quarter, so it's very, very negative and backward looking. New orders, durable goods up very significantly, 16.4% from 8 points from a -6% in May. So it's a very healthy durable goods order. I'll let you focus on the durable goods order. If I look at the unemployment claims first, Arura, if you look at the durable goods as we go forward, if I just
Yeah,
want to bring in this chart here, is that this week's 26th of June? Yes, it is indeed. So as you can see here, we've had these 3-4 weeks of heavy over 40,000 for the weekly claims, adding to this idea that the jobs market is weakening, starting to show some sort of cracks or fissures. Describe it how you want. But interestingly, there's been no amendment, or actually 1,000 higher, so it's actually ticked higher than than down. But 236 is a bit weaker than expected, but it's still over this where we'd been, this 220, 230 idea. As I said before, and I've said for many years now, 230, 220 for weekly claims is a very strong US jobs market. So we're less strong rather than weak at the moment, but we're certainly showing some weakness. Every other, as I've said for the last few weeks, every other time we've spiked to this 240 level over the last 18 months, save this October outlier of 2024, which still remains just shy of 260. We've come down, and then last week this month we haven't done that. We've gone up and we've held over this 240. So hence the momentum that jobs is looking a bit weaker. So if this next week gets revised back to above the 240 level, that will give the Hawks this more of a momentum, perhaps for looking for a July cut. A July meeting cut. Waller and Miss Bowman might have more to say about that over the next few weeks, but we'll see how that all pans out. If we just go to Arcan, unfortunately, it doesn't update instantly. I have to refresh it, and then it brings in all the other data I'm not interested in, unfortunately. But Tuesday, well, not Tuesday, it's Thursday, and here we are. So here we are. Initial job claims 236. 4 weekly average is now 245, and the ongoing. Where's the ongoing claims? Where's the ongoing claims
going? Little bit lower, 245. It's just like few hundreds.
Yeah. I've lost the content.
It's low.
It's normally at the top.
There
we are, continuing claims. So it's back over. It's back close to the closer to the 2 million mark than would want. So again, that's a weak number as far as the jobs market is concerned. Last week was better, 1.937, and we've gone to 1.974 for the first reading. It was expected at 1.95, the 4 weekly average. Back over this 245 number as well, or down to that 245 number. In May, there are PC prices. It's only got one bull candle here, but that's going to feed in to tomorrow's key PC price index number, 3.7% there. So the Trump's claim that there's no inflation is incorrect. I would hesitate to correct the president, but there is inflation, sir, and it's not going away too quickly. Look at this number here, 3.5% for the first quarter. Durable goods, 16%. Arura, what's your take on these very strong durable goods numbers?
Yeah, when you're looking at the data, put together the inflation with the orders, so that's normal. When you have the orders increasing, look at these orders. That the orders are very strongly. Even thought the orders excluding transportation. Look, the durable goods orders excluding. The orders excluding transportation supposed to be flat, but it's increasing by 0.5%, which means the people there, even thought that you have to exclude the aircrafts and the Boeing orders. Still, the people they have money and they're spending money, and including transportation, we have more than 15%, 15.5%. That's amazing number. One of the historical big numbers. What that mean? What that mean for the economy? So when you have the orders, it means that you have the demand in the market, because when you have a demand in in a market that the people they can order the things to can whatever it happens here. So that's one of the reasons that we have still the inflation high. I mean, the reasons that one of the reasons that we have inflation is still high because of the people they are still have a demand. I mean, yeah, they are spending less money compared with the previous months. If you are looking at the like PC price index increased by 2.5%, but real income, where is the real income here? There should be we have to be the income in the first quarter. Real consumer spending 0.5% in the first quarter. I mean,
Yeah.
still the people spending more than 0.4% that we had in the fourth quarter previous year.
Yeah.
So while
I
at the
mean,
same time,
it is a massive number, 16.4%.
yeah,
I mean, you
yeah,
were talking about obviously companies in particular. Remember, these are durable goods orders, guys out there. You know,
yeah,
this is stuff that lasts for months and months, years and years. Sometimes before it gets used. Sometimes in obviously not years, but you know,
yeah,
it's in
yeah.
storage, it's in inventory for a long time. So companies have felt confident enough to order this. They've obviously got the money around to do that. Trying to front run the tariffs. So they've done that in April, as we saw this 8.6% rise. The pullback we saw in May, but a big in April, and a big bounce back here for the May data as well. So we'll see what June
This
looks
is
like next month.
this is that just for don't forget about that. Just putting together, look, when we are putting the numbers together, we can understand the situation better. So we have the prices increasing, right? We have the orders also increasing, and look at the even at the current situation at this time, we have initial jobless claims only 236k.
Yeah,
200, as you mentioned, 236k is an amazing number. It means that the labor market is doing amazing. As long as we have the number under 250k in the U.S. economy as a weekly claims, just like four-week average is 245.
yeah,
So it means that the labor market, yes, we have some cool
yeah,
trade
yeah.
market.
From here,
Like two
from earlier
months
in the
ago
year
it
to
was
here, yeah. So
yeah
I see that, yeah,
2 months ago it was 220k. Now it's 236, 235. Still less, much less than 235k. So which means that the labor market still is powerful.
yeah,
Still is
yeah. Still relatively
resilient.
strong, yeah, exactly.
So
So
which
there's a
that's why we have the inflation
yeah,
higher.
yeah,
So
yeah, yeah,
you look, that's the point. That's the
yeah.
point. What I wanted to why I made this point, why I put these numbers together, and now coming to this point. Then you have inflation, but at the same time you have a strong labor market. You have a good orders. This inflation cannot put the consumer under pressure too much, because right, the prices are going higher, but you have a job, you have an income, so you can afford something to buy.
Mm-hmm.
The inflation when the inflation is bad, or when we can say that, oh, that's a danger number in the inflation, when the inflation is high and your labor market is weak, that's all your orders is low. When you have a higher inflation and your orders is slipping, or your orders is slowing down, and your labor market is weak, that's the danger. I
Mm.
mean, that's the
Mm.
risk.
Yeah.
So with these numbers, I don't see too much problem with the inflation, because the inflation and average income is more than the inflation. The average income is more than the inflation. It's
Yeah,
adjusted
and again,
real
that's
income is
exactly
more.
what, yeah, exactly what Powell is sort of wait and see, wait
Yeah,
for more data. We're no rush to cut rates. The president is, cut now, and if you have to put the rates back up in a year's time, he was saying it yesterday, yeah, a year's time or 2 years time,
yeah.
so be it, but cut rates now, and he's talking about a 2.5%. Wanting rates down at 2.5%, and you can see there's a bit of an argument for there. Again, if we look at this central bank rates, I know we keep referring to this, and also the 10-year yield as well. The US is a bit of an outlier when it comes to
Yeah.
the other major economies. So the US remains top of this pile. It doesn't happen very often, but 4.5% is still the central bank rate, and Powell's reluctant to cut that. It's driving the president to distraction, and he called him out personally, which is Trump's way, isn't it? So yeah, we'll see where we go. But at the moment, the conservatives, or the more nuanced thinkers, are still hanging on to no rate cuts, because this inflation could be a bit more persistent than many are thinking. But Powell's long-term view is it is only. Again, he hasn't used the word transitory, but that's we talked about last time. But that's where we are. Anyway, let's have a look at how the market has reacted to that data. So if we look at the euro on this shorter time frame, We obviously so we've been bid all day. So the immediate reaction was to cool euro dollar a wee bit, but we've bounced back and we're back sort of a bit at the low point of the data coming out, but we're still very, very elevated, and we are literally pivoting through the 117 area. If I put a new line on there, 117 for the future reference for on this chart. So 117. So that's long time since the euro was up here, but 117 is the new pivot area. Certainly on a short-term basis today, having been as high as 117.43 this morning.
This is the area that I was telling that I am waiting to find some good opportunity to sell. This is the area that I am actually thinking about the sell the compare in a euro USD chart, actually, not in a euro against the pound, not in a euro against other currencies. In the euro against the US dollar, this is the area that I think that the dollar index is under 197, around 96. So this is the area that we are waiting for some rebound in the dollar index, which this rebound in the dollar index can support the euro, can support the US against the euro. So I think we should be a little bit more careful about this area, about the buy positions that we have, or either that if we want to have a sell position. This area is a little bit risky level for the euro USD. As I mentioned, euro against US dollar, not the euro against the pound, not the euro against the Kiwi or others. Go ahead, sorry.
Yeah, well, I'm a trend following guy, and I'm still long this, and I'm just following. I'm just seeing what we can talk all day. Analysts can talk all day. The price is everything, isn't it? Whatever the market says is the market is right. Whatever we think or whatever anybody else thinks, it doesn't matter, because the price is the price. If you want to swap euros for dollars at the moment, you have to pay 117. And that's it. That's what the market is giving you.
Yeah, exactly.
And that's what we all got to understand. I mean, technically, we've had. It's not really three white doves, three white soldiers, this three soldier candle pattern, because its first one's much bigger than the following two. But the strength of the body of the candle today is as good as it was on Tuesday and Wednesday at the moment. So but normally when we get candle patterns recognized, they normally peter out, or they run their course after what they're supposed to do after 3 to 5 candles thereafter. So 117 is a bit of a stretch. 116, as I said last week, was a bit of a stretch. That note I wrote at the weekend, it rejected it 3 days in a row. We came down, we went under 115. Looked like there was a bit of a correction, but we were supported by the 20-day moving average, and what a week we've had to the upside as well. So the weaker dollar story continues. So as far as the reaction to the data is concerned, it's been somewhat muted, hasn't it, really? Here's the 5-minute candle. We were down, we were back, and it's now being bought back. So it's really the overall pending that data. It's not going to change anything. It's, as we say, the weekly claims are a little bit better than have been the last 4 weeks, but as you said, anything under 250 is still a relatively strong US jobs market, and 220 is a very strong US jobs market. So euro 117.10 to the upside at the moment. Let's have a look at some of the others as we go. Crypto's had a really good bounce back, 107.250 on the crypto, on the Bitcoin side of things. So strong day yesterday from this strong week again, from the dip under 100,000 here on the 22nd, and we continue to accrue. And if we go up to the daily time frame, the all-time high is within striking distance, 111,000. Actually down a tad today, but again, 3 strong candles from Monday, Tuesday, Wednesday, down a tad today, but we're over that key 106, 105 area, and this cross, this big fat support area at 105, where the 50 and the 20-day moving average sits. So crypto, Bitcoin here, bid to the upside. Gold obviously got a lift on the weaker US dollar. We're at 333, all the threes. And again, another one that's moved lower. That had moved lower into the 50-day moving average, and we bounced off that a wee bit, testing the key 3,300 level big fat round number on Tuesday. Up day yesterday, and we're sort of flat today. Cemented between the 20-day and the 50-day moving average. So a move back over the 20-day moving average might take us higher. A significant break of the 50-day moving average will certainly take us into 3,000 and 3,300, and below very quickly to 3,200. I would argue technically on that chart, but at the moment it's on meandering sideways. Excuse me. With a down trend line now, you could stick on there. I'd say from this bodied candle there, that's your daily trend line to the downside. So you can see the break to the upside. If you pull this down to the hourly chart, you'd want to break back through here. Oh, that's your test to the upside, supported here since late last night by the 50-hour moving average is flattening out. So we're just lifting a bit, got a bit of a wedge there, perhaps. So perhaps upside target there, so supported. There, if we split the difference, got the 4-hour chart, you can see there's that downtrend, there's a bit of a uptrend line support from the test of the 3,000 level. So, I mean, they're two different trend lines, two different time frames, but you get the point. Bit of a triangle forming there. So, we break up, we're going to be up to here somewhere. If we break down, we're going to be under 3,000. To the downside. So buys is a wee bit to the downside, but we'll see how long this dollar weakness continues. If you're trading it on a shorter time basis, on an intraday basis, what's been going on today? So a quick look at the 15-minute chart. I know a lot of you trade gold on a short-term basis. Again, this is that 4-hour trend line. It's sort of loopy. We got higher highs, higher lows, but it's rolled over from the start of the peak we got to here in the European session at 3,350 again, and we've been coming down since then. So a break, literally where we are now, a break at this 3,330 level will take us, you would argue, easily to test this 325 level if this level holds. Otherwise, we're sort of going sideways. For you scalpers, we are, 2-minute chart here. We're down, strong rally, quick break down there, and you're short there, breaking under that 333.25 level in the last 5-minute candle, so our last 2-minute candle, so a break down there. Interesting. There's a interview with Mary Daly from the San Francisco Fed on a key dove from many times with Bloomberg. I'll watch that later. I'm watching that live now. So that's gold. Anything else? Anybody? Is anybody here wants to question us on anything? Let's have a quick see who's here. Right, guys. Sorry, I didn't. Jose saying this pair is untradeable. Which one? Dollar. Well, yeah. Jose, you're absolutely right. I mean, well, it's not untradeable. You just trend follow it. You just keep adding to your position. That trend is very set. You were talking about the lira trade. If we go back to the exotics, sorry, I've seen your questions here. It wasn't on. If I go back to USD TRY, yeah, I mean the trend is what the trend is. There on the daily basis, you use the 20-day moving average as your stop loss and just add to it as it keeps continuing up. See how the moving averages here, the 20, the 5, and the 9. That's what these. The orange line is the 5, the green line is the 9, and the red line is the 21, and the green line is the 50. So the higher the number, the further away from the price action the moving averages are. But they're all aligned. They haven't crossed. They're nicely in a up trend still. This has been going on for years and years and years. So try and short this pair at your peril. Obviously, the spread on something on exotics is wider than the euro dollar or the highly liquid and highly traded pairs. But trend has been very much your friend, Jose. It's very much just following that up. Unicorns saying after hitting my stop loss, EU going on my direction. Okay, well, that is part of trading, Unicorn, my friend. Don't get too hung up on it. Just because it's this idea. This is the psychology of trading. Let me just go back to the euro.
Let me tell you something about this because that's very good. I mean, one of the biggest questions always that the many traders, especially the new traders, have that say, "Why the market hitting my stop loss?" The problem is that the market doesn't hit your stop loss. You put the stop loss in the wrong place. That's one of the biggest mistake. The way that we are sometimes the traders going is around the back. Like sometimes the people they're doing this. Okay, let me first. They are first opening the position, and when they open the position, then they are looking after the stop loss. That's the biggest mistake that we can make. Because the market, look, the stop loss usually you should put the one of the best way to put your stop loss is choosing. I mean, before you open your position, you have to know where you are going to put your stop loss, and based on your stop loss, you have to open your position and how you have to select your lot size because usually the market is returned around the K levels. If you do not select, if you don't, I mean, if you don't put your stop loss in a trend in a K levels, or if you ignore the K levels, just okay, I opened the one lot position in Euro USD. So based on my one lot and based on my the money that I have, the average, I mean, the liquidity that I have, my stop loss should be here. No, it's your stop loss. So the market doesn't pay attention in your stop loss. Market pay attention in its stop loss. So the stop loss in the markets try to first select your stop loss and where this stop loss should be usually around the K levels where the market historically returned or historically had I mean big reaction on that prices. So way around first select your stop loss where it should be, and based on your stop loss try to find a better position and a better lot size to open. And so that's if you go this way I mean, if you go to you trade from this way, you're gonna probably see less times that the market, I mean, hitting your stop loss.
Yeah, absolutely. Yeah, you've listened well over the years, Adnan. You're repeating the mantra of Uncle Stuart very well. Yeah, absolutely. I mean, Unicorn. Thanks for being here again. You were here yesterday as well. I don't know what time frame you're trading, but whatever system you have, whatever approach you have, whatever edge you have, that's what's going to make you money. You've just got to accept that you will have lots and lots of losing trades. Too many people come into this business thinking it's a one-way business. Excuse me. And they only concentrate on worrying about their winning positions. What all successful traders do and always have done and always will, they know exactly where they're going to get out before they place the trade. So like with this, I can't remember what we were with euro dollar, but I had my stop loss all the way down here somewhere. It's up here at the moment. I will drag it up as we've gone through target one, usually to some particular technique. Sometimes this isn't always fact, but when I'm doing it manually, I tend to look at the 4-hour chart because this is a end of day position here. Which we took. Stop loss was down here somewhere. I would normally now, let's do this live. This obviously isn't a live position, but the live position's on my trading platform. The 20 period 4-hour moving average seems a good place to drag the stop loss up to. I might even drag it as high as the first take profit level. I think I will probably do that, to be honest, as we've gone through 117 so successfully. And if we retrace to the target one, so be it. We still made lots of pips, and it's the end of the month. We had a terrible week last week. We're having a much better week this week. So I'm happy to take that and start again on Monday for July, and be another successful month. So I don't really care. I mean, the trend is set, so that's what I tend to do. But you've got to have something that works for you, works for your time frame, works for your psychology more than anything, much more than anything. And so that's what happens. So don't beat yourself up just because it's hit, you've been taken out and now it's gone to your. That's what happens. It happens all the time. Happens to me all the time. It happens to every single trader I've come across. I know that's actively trading the markets, whatever they're trading. You get within a few pips of your target sometimes, and it retraces all the way back to your entry and all the way to your stop loss, and that is just sod's law. And if you can't cope with that, don't trade. Go and do something else. because it'll happen, and it happens all the time. So yeah, and the fact you've written it down, Unicorn Trader, is good because you've got it out of your subconscious. You've exercised it, if you like. So sod's law. Jose, just back to your point about the spreads too wide. Yeah, I mean, that is the problem with trading exotics, guys. That's why they're called exotics. Spreads are high. There's less market makers. There's less liquidity. There's less volume. So therefore, spreads are high. And you also, your other comment there about slippage as well. I mean, slippage occurs anyway, but on these less liquid, less volatile things, whether it's a currency pair or it's a penny share or whatever it is you're trading, a smaller index that isn't traded by everybody, that is much more likely to happen. You're absolutely right. But regardless of that, the trend in the dollar, the trend in the dollar lira is very, very set, as I said at the top of the shop. And if you just bought this and let it run, you're very, very much in the money. But as Arura said, is out of a weak currency isn't all negative news. It's obviously terrible for importing stuff from abroad, especially if you're paying for oil in dollars or wheat in dollars and stuff, or cotton or whatever it is. But obviously, Turkey's a big exporter as well, so it makes their exports very cheap, and it's a big holiday destination, and it's growing significantly as a holiday destination. So that's positive. But anyway, our point was about the independence, or therefore of the central bank there. But yes, yeah, Jose, your comments are absolutely fair comments. But anyway, what's next? What have we looked at? Yeah, indices, they continue to move to all-time highs, or looking for all-time highs. The Dow has given up, as we said yesterday, it went through the 43,000 level. Our all-time highs at 2,000, just 2,000 away at 45,000. Down a bit yesterday and up again today. The Dow was down 0.5 of 1%. The Nasdaq was up 0.3 of 1%, and the S&P 500 was just under the 6,100 at 6,092 on the cash market. But we're positive again today, I think, aren't we? Yeah, there we are. We're positive today on the Dow. The DAX down today. Sorry, up today, but down in the last couple of hours. The Nasdaq up again today, breaching that 22,000 level, and we're breaching 22,300 at the moment here on the hourly chart. We've got the daily chart. You can see this strong, not weak, a bit like the currency pairs, but the weakness of the dollar has lifted tech stocks again, and here we are above its previous high back in February. So new all-time highs continue to push higher for the Nasdaq 100, driven by Nvidia. Tesla's helped that as well. With this self-driving robo-taxi, there's been lots of faults with it, but it's all out there, and it lifted stock quite significantly earlier in the week. So stocks, yeah, Nasdaq leading the way. The S&P 500, I say, our derivative here is back over 6,100 today. So strong week also for stock markets. Somebody was talking earlier on CNBC, I was watching out of London, talking about a melt up, a bit like we had in the 80s for the stock markets for the second half of 2025. The other thing that's going on as well, remember, guys, we've got the end of the month and the end of the quarter coming. So it's the end of the full first half year as well. So there's lots of significant numbers getting put together. So there's lots of churn going on in portfolios this week. Profit's not a profit till the trade is closed. So bonuses for the second quarter or bonuses for the first half of the year, all of that on the line. And that does, obviously, technically it doesn't close until Monday's close of business, but lots of shops I know, lots of banks obviously closing this Friday and I'm certainly closing my book for the first half of the year on Friday as well. So lots of churn going on there, and it's lifting stocks, and it's just where do we go? We go back to tech stocks, and that's why the Nasdaq has done so well. The Dow less so in the rally up. Dow did better as we were worrying as we were coming down into this April low on the 7th and the 8th following the 2nd of April announcement. Obviously next week we got July the 4th, and then July the 9th is just drop dead date for tariffs and his big beautiful bill, as he's calling it. will it get through? Probably. Some chuntering and some negotiating still to do. So stocks are bid. The dollar's weaker. Crypto's back up. Bitcoin at 107,000. So, if you're long, the fundamentals holds relatively well with the world. And finally, we got a bit of a lift on the oil market as well. $66 US oil. Back off that 60 under 68 earlier in the week. Obviously the big crash we had on Monday, and we're sort of consolidating around this $66 level, as we said before, right under, interestingly, the that fib level of this leg up. So that's potential more weakness, and perhaps closer to the 50-day moving average than the 20-day moving average, but we're at virtually right between the two, equidistance right between the two, but under the $67 level at $66. So oil sort of finding its way, waiting for the next news, particularly out of the Middle East. Jose, I guess Turkey, what's he saying written here? Sorry, Jose. I guess Turkey must be self-sustainable in every aspect of life. Import is practically impossible. Yes, absolutely. It's a big country. It's it's got a big population. Geographically, it's a big country. It's got a big population and lots more potential. Huge amount of potential in Turkey. Obviously, the politics there are. Well, I won't comment on that. I'm sure Aurora could say something on that, but anyway.
If they think, sorry, my mic was off. I was thinking that it's on. I was trying to say that why the mic is off. About the people, about the things that, like, in the economy, you cannot close your door and say that, okay, I'm closing my door and doing everything in my country. No, you have to buy something and you have
Trump's trying to do that.
Yeah. So this, no one, even the North Korea cannot do that they close all the doors. That's it's not possible. But generally, the thing is that the countries in this kind of the condition, the country should prepare the condition that the people, they can afford to buy if they want, and if they cannot afford to buy the expensive stuff, they can be able to buy the cheaper stuff. The Turkey, the thing is that if in the Turkey you want to buy the local things, the most things that you need, you can find the local brand and local stuff, even if from the cell phone to TV to a car to the eating, putting. The most things that the people, they need to for their necessary life, you can find the Turkish brand and Turkish product. So, so it's not such a big. It's the economy compared with the previous years is a little bit harder to live. Same thing that happened in many countries, but still the economy is still strong. And generally, I'm positive about that. I'm generally positive.
Yeah. Okay, Jose, thank you for your input. If there's no more questions, we'll wrap this up today. We'll see you again tomorrow for what I deem is absolutely fundamental piece of data. If it's in line, nothing will change. If there's a big surprise, either upside or downside, the PCE data, is it going to show more weakness in the inflation numbers, adding to pressure on Powell to act, and the Fed move in July perhaps being elevated? Interestingly, it's around about a 25% chance of a cut in July now, given the political ramifications that are spinning around and this sort of trend in the inflation area. But it probably will. The PCE number, let's just bring that back up. Given that the hard data is yet to start running, but we'll see what this number looks like. So 0.1 of 1% for the month. We just go to our calendar here for tomorrow. The PCE, it's all the way down here somewhere, isn't it? Here we are, price index, 0.1 of 1% for the month, 2.6%, a bit of a tick up on an annualized basis, 2.3% for the PCE, and then income 0.3 and spending 0.1. So see what these numbers are like tomorrow. Absolutely key to round out the month, the week, and the quarter, and the half year as well. So there we go. All right, guys, nice to have you here. Thanks for your time. Thanks for your input, Jose, especially Unicorn Trader. I hope you're okay. Contact us on Discord if you want some help with anything. We're here to help you. So see you all again, same time tomorrow. Take care, everyone. May the pips be with you as ever. Thanks.
Always. Yeah. Have
see
a
you.
good time.
Bye-bye.
Yeah. See you.